How's it going, traders? Welcome to the late night option show. We covered all the month of May biggest prints. Now we're going to talk about the biggest prints that hit this last week. If you've ever wondered what the whales are doing while you're stuck choosing between Tesla and SPY for the 10th time this week, well, this episode is for you. We're diving into the latest big money options flow from Investor Central Club. And trust me, it's juicy. These are going to be options from the 26th to the 30th. Today, I'm going to break it all down in plain English, by the way. What these trades mean, why they matter, and whether you should care. We'll cover ETF and single stock flow, big buys, sneaky sells, and even weird outliers. Let's go ahead and dive straight into this. So let's quickly set the stage. What is options flow? First things first. It's basically a real-time look into what the big boys are doing. We're talking hedge funds, institutions, insiders, the whales, you might call them. When someone drops millions on an options play, especially in big blocks or sweeps, it tells us they're making a bet or hedging one. But here's the twist. Sometimes a big put buy isn't bearish. Sometimes a call sale isn't bullish. Confused? Don't worry, let me explain. Now, institutions don't just YOLO into trades. They have reasons and context for everything. Let's go ahead and look at some options here. When buying options, it's usually a directional bet or hedge. When we look at the QQQ 470 put that was bought for the December 25th expiration, that netted 120,000 contracts and a $194 million premium. This is likely a macro hedge or anticipating a slowdown in tech dominance heading into December. Now, another one we saw were coin $230 puts. We can see down here, these were bought for August 15th, 2025 expiration, 6.09 million spent, netting them about 3,750 contracts. This is possibly tied to crypto market weakness or regulatory fear as well. Another one that we saw here were the DJT puts for $20, July 25th expiration, 27,000 contracts for a $6.37 million premium. This could be political risk, earnings disappointment, or liquidity bets. We also had, now when selling options, it's often a yield play or a cap strategy. One example would be the QQQ 580 call for December 25th or December 19th of 2025. These 13,500 contracts with a $14.5 million premium for sold. This suggests belief that the tech rally has a ceiling to it. NVIDIA 155 calls for December of 2027, mind you, 2,842 contracts sold with an $11.2 million premium. Classic covered call strategy for income or long-term holdings. Tesla $300 puts for March of 2026, 1,500 contracts sold with a $6.56 million premium. Seller may want to own Tesla at $300 or expects it to stay above that level. Salesforce, aka CRM, also saw $270 calls for June of 2025. 10,000 contracts sold with a $4.4 million premium attached. Betting CRM won't make a big move above resistance. These trades show institutions are either bracing for impact or getting paid while they wait. Now, let's talk about some of our big money ETF flow here. So when we're looking at our big money ETF, again, we already covered this, the QQQ 470 put, 194 million premiums. It's the biggest bearish bet from this week, likely tied to tech overexposure or interest rate fears. We also have QQQ 450 puts for December of 25. This is 120K contracts with 130.56 million in premiums. This could be downside protection in a high beta portfolio. We also had SPY 465 puts, 70K contracts with a $5.46 million, and these were being sold as well for July 18th of 25. A midsummer correction hedge, maybe? That's the way to look at this. IWM saw $195 puts for June of 2025, and that gave them 57,000 contracts with a $7.92 million premium. Recession fears hitting our small caps the hardest. These look like either car crash insurance or heavy downside bets. You don't spend 9 figures on puts without serious reasons. Now let's talk about some of our non-ETF flow in the big money sector as well. Now, CRM was leading the way with these June 20th 275 puts with 10.272 million in premiums, giving them 9,200 contracts. CRM missed guidance recently. This could be a play on continued underperformance. Mind you, Salesforce also is never really a profitable company. So not very shocking that we're seeing this type of action. DJT, we saw $20 puts with 27,000 contracts with a 6.37 million premium on these. Speculative bet on volatility ahead of election-related headlines here. Again, we saw those Tesla $300 puts for March 2026, 1,500 contracts and a $6.56 million premium. This could reflect concern over EV pricing wars or Elon-led volatility. We also were seeing the Coin 230 puts of August 2025, 3,750 contracts with a $6.09 million premium attached, possibly worried about upcoming crypto regulations or SEC battles. These aren't small fry bets. These are full-blown statements. Big traders are betting on volatility, legal risk, or macro landmines. Now let's talk about some of our unusual bets as well. So GLD, $300 calls, June 25th expiration, 2,400 contracts. We're looking at around 7.18 million, I believe, in these as well. Let's go back to our big money and go ahead and find that for y'all. So yeah, our GLDs are going to start printing there as well. And these are calls being sold, mind you. So is this a gold moon mission, maybe an inflation or geopolitical hedge as well? But it looks like someone thinks that gold could potentially stay above 300 here. We also had SPY 470 puts, 70,000 contracts and a $3.7 million premium, positioning for downside in a high interest rate regime. We had the SPY $500 puts, July 25th expiration, 35,000 contracts, $5.2 million, layered downside protection against a Fed pivot or stagflation poking its ugly head back in. We also saw some SPY 525 puts for July 2025, 1,840 contracts, $8.9 million in premiums, very targeted strike, could be macro hedge or part of a complex spread. These stack up to a major hedge against an ETF drawdown. Could be more macro worries, but could be algo stacking. Either way, these are things that are worth tracking. Now, some unusual non-ETF flow here. We saw GEV calls being sold for the 550 strike with a $6.5 million premium. This is a total moonshot. Could be biotech catalyst or a speculative fund play. NVIDIA 140 puts for July of 2025, 6,000 contracts, $6.15 million in premiums. Betting AI cools off post earnings or macro headwinds as well. Now, Coin 230 puts, August of 2025, 3,750 contracts, $6.09 million in premiums. Crypto hedge or rug pull risk. The market is unsure on regulatory outcomes here. These are not trades you ignore. These are high conviction, high leverage plays. You don't drop millions on deep out of the money calls unless you know something or want to find out fast. Now, what do you do with this intel exactly? This is how I play it. I track repeat players and sizing. If someone comes back to the same strike a week later, pay attention. I watch for clusters, multiple trades in the same name, strike, and expiration date. Those are high conviction plays that you can typically follow with confidence. I don't blindly follow either. Flow is just a clue. It's not a signal. Typically, I use it for confirmation of theses or ideas that I'm trying to play out or how I think things may play out here. Always combine your flow analysis and my flow analysis that you may read of mine with your own TA, macro, and news catalysts as well. But when 194 million hits QQQ puts, you better believe I'm watching that ticker close and anything that could happen with that. But that wraps up this week's deep dive on options flow from Investor Central Club. By the way, if you want to get this data, your first month for only $30, use the code 130 at checkout and you'll get your first month for $30. You can read my flow recaps while getting real-time flow during market hours. Anyways, if you like this breakdown, smash that like button, sub for more, and drop a comment. What flow stood out to you the most? Until next time, trade smart, stay weird, and always follow the whales.